Come on, 2, 3.
Good morning. Welcome back to the Broadcast Retirement Network. I'm Jeff Snyder. This is BRN AM for Wednesday, April 27th, 2022. And our top story today, ESG investing barely registers for retail investors. Joining me now to discuss this and a lot more, Bob Colley is the principal and founder of Colley ESG. Bob, great to see you again. Thanks so much for joining us on the program this morning.
As always, it's a pleasure, Jeffrey.
So we've got two really great stories. The first one that I want to chat with you about, Charles Schwab released some data, ESG, not really registering with retail investors, at least certain segments of the retail investing population. Thoughts on this?
Yeah, it's going to take time for it to really embed itself into the mindset. But I think one of the ways to look at this is to compare it, say, to something like recycling. Okay, I mean, I don't know exactly what the recycling arrangements are around where you are, but where I am now, they come by every week and they collect your recycling, and you sort it a little bit yourself, and off they go and you do that. So it's really, really easy to recycle stuff. And since they've been doing that, the amount of recycling that goes up way more than it used to be in the old days. You had to put it all in your car, traipse off down to wherever it was that the recycling centre was, and you had to take care of it yourself. So in other words, they made it easier so people do it more. And I think with ESG investing, what you're likely to see is the same dynamic go through, that as firms find ways to make this something that's more accessible to investors, that demand's going to increase. So you kind of get this self-reinforcing loop that as it becomes easier, more people want it. As more people want it, firms have an incentive to make it easier. So one of the things, for example, and I think what that survey did bring out that's very important, is the extent to which fee differentials is going to be a barrier to this. I mean, if I am considering different products and there might be one that I like on balance because of its green features relative to another one, but you're trying to charge me a 30, 40, 50% fee premium for that product over the other product, well, I'm much less likely to go for that. It's all these trade-offs that people have in their mind. So I do think it's going to be a gradual process, but I also think that we're seeing a shift in general attitudes, we're seeing a shift in the market, and it is something that's gradually going to become more easily accessible over time.
Agreed on that. And Bob, I wonder how much, and I don't recall the timing around the survey, but I wonder how much of the survey results and the opinions were formed by high inflation, some of the current events that are going on, right? So there's the long-term shift and then there's the short run. And, I think we all know what matters to a lot of people is, as much as we talk about long-term in this business, what really matters is the short run. And I wonder, forgoing the generational gaps for a second, because we'll talk about that in a second, but I wonder how much high inflation, the war in Ukraine, which is disrupting supply chain, the existing pandemic disruption of supply chain, all the issues that we're facing in the short run, is that disrupting the sentiment that Charles Schwab captured in its survey?
Yeah, it seems to be. I mean, but as with a lot of things, it could play out both ways. You see the argument that, as things start to clarify where we're going with Russia, and obviously what that means for the global oil supply, and where Ukraine ends up and what that means for global food supply, is that turned a spotlight onto the importance of these commodities and the importance of energy independence and so on. So it may be that there are fallouts from some of these short-term effects which reinforce the need to change investing to be more sustainable. Although, as you say, it can also be very disruptive to it, because inevitably, if we're finding ourselves pinched and inflation becomes an issue, that is going to affect the way that we make our decisions around sustainability. it shouldn't be something that's an optional extra, but it can become less of a priority if you've got something that's right in your face. So I think, yeah, you're exactly right. It's a complicated picture.
And Bob, I mean, I always find it hard with these surveys. They usually say 1,000 people. Well, in the U.S., there's 330 million people. In the world, there are billions of people. Really hard to capture the sentiment of everybody. It's trying to be representative. So, I always am doubtful, when I look at polls and information, just because I know what I think, but who the heck's going to tell me what they think? And how am I going to get the opinions of like everybody in the world? I mean, it's just not possible. But coming back to the generational mindset, the study seems to indicate that there's different and we've talked about this. This is not a surprise to the audience, but let's just talk about it again because there might be some new nuances here. Different generations have different thoughts about sustainability, ESG, and the application of whether or not it makes sense in their portfolios. And we can't paint everyone with a broad brush, saying that all mature people don't think this way and all young people do. It's usually a dichotomy. But your thoughts about this proposed generational gap?
A lot of things do take a generation for attitudes to really change. I mean, so if you've grown up in an area where there's big conflict between two groups, be it different races or different religions or whatever around the world it is, if you grow up within that conflict, it's going to shape how you see the world for the rest of your life. But that next generation, that's not firsthand for them. That it's not as embedded in. So I think all of our experiences do stay with us for our lives, and that makes something of a difference. But I wouldn't want to overstate the extent to which ESG is a generational thing. Most of the people I know of my age are concerned about the climate. I mean, this is not something that it's only the kids care about. It's something that is universal among the people that I deal with. But there's clearly within America in particular, there's a big difference between rural attitudes and urban attitudes and suburban attitudes. I mean, we know that in so many ways, and that's not just how you want to invest in your attitudes towards the environment. It's a really fundamental shift. They're different groups of people, and so I think yes, it's any statement that we make, it's very hard to apply it across all generations, across all the racial groups, across all of the political groups, but even within a particular group, no one necessarily fits the exact stereotype of, the white 55-year-old male sitting in Massachusetts may not be exactly the views that you assume they have. So there's differences at every level.
Yeah, look, I go back to, I'm going to go a quick commercial break in a second, but in the 40s and 50s, people were afraid of rock and roll music, in particular Elvis Presley with his dancing. So we seem to have gotten over that, and people have embraced rock and roll. Now we've got hip hop and rap. I think you're right. I think it's a generational thing, and I don't think there's a person out there who's going to say they don't want clean drinking water, they don't want clean breathable air. They don't want to be able to grow plants for them or food for them to consume. So again, I think it's going to take time. I think you're absolutely right. Bob, I want to take a very quick break. When we come back, countries are ramping up their disclosures around ESG. What do you need to know? Well, you're going to have to stay tuned right here on BRN AM. Imagine a new television network that will make you richer, healthier, and in control of your financial future. This network is for the policewoman in Nashville, Tennessee, the baker in Dubuque, Iowa, the teacher in Lexington, Kentucky. We want to make the idea of savings and retirement culturally relevant. But what do you see as a defining issue of the midterms? especially for the smaller businesses. I mean, they are the lifeblood of the American economy. Featuring exclusive interviews, current affairs, and docuseries. 33 years old, you retired early.
The philosophy is money only matters if it helps you live a life that you love.
But you got to start thinking about retirement as soon as you get in.
The Broadcast Retirement Network will drive very high engagement with premium partnerships. So this isn't retirement and savings for your parents or grandparents. This is for all Americans. And we're going to change the way you think about money. Welcome to the next frontier of retirement and savings. This is BRN, the Broadcast Retirement Network.
Are you stuck with a low credit score? A credit report and score that's causing you to be denied credit or pay higher interest rates than others for the same things? Then do what Terrence did and call Credit Repaired for your free credit evaluation to help restore your credit.
I started thinking about buying a new house, and my score wasn't where I needed it to be. I called and spoke with one of the representatives, and we just had a good conversation, and I liked what he was saying.
Just one call for his free credit evaluation was all it took to start back on the track to repairing his credit.
I'm seeing the deletions and I'm getting the report, so I know something's being done. It does make a difference to me.
All it takes is one call to get started.
Credit Repair has given me a second chance to have a better credit score.
Don't let a low credit score hold you back another day. Do what Terrence did and make the call for your free credit evaluation.
Call 800-819-4152. That's 800-819-4152. Again, 800-819-4152.
Welcome back. We're talking this morning to Bob Colley of Colley ESG. Bob, thanks so much for sticking with us this morning.
No problem.
I'm glad I didn't scare you off with my Elvis Presley. I wasn't going to do an imitation. I'm glad I didn't scare you off with my metaphor there, but I think it does apply. All right, let's talk about disclosure. SEC getting involved now with trying to come up with a disclosure methodology, way that information that should be disclosed for these types of investments. And by the way, Bob, it's not just ESG investments. They're looking at private markets. They're looking at cryptocurrency. So ESG is not being singled out. But countries around the world have started working on this disclosure issue, and it's a big deal.
That's right. Because investors have really woken up to the fact that we have to look at a lot more about a business to really understand it than maybe we did traditionally. You know, we want to understand what kind of environmental impact they're having. We want to understand, you know, how secure the supply chains are. There's just a lot about a business which we didn't necessarily look at closely as investors in the past, that now people have woken up to. These are important financial considerations. You have also, as a side effect of that, a lot of insight into things that go, you know, beyond just the financial implications. So yes, you know, a company's carbon footprint matters to an investor because of how it might come back to bite them in terms of regulation and so on. And it also matters because it matters in and of itself. So much more interest than ever in what the environmental footprint of a company is, be it climate or the other environmental aspects, and also a lot of the social aspects as well, which gets a little bit harder to define in some cases. But you know, we're looking at supply chains, are there human rights abuses and so on within that. So all of this information investors want to know for a variety of reasons, and that data is not necessarily as easily available today as it should be. So this is the intent. Difficult thing to do really well, and we're certainly not going to get it right or perfect, but we can certainly do a better job than we are at the moment, and that's where these regulations are pushing.
And Bob, you know, at the beginning of the segment, I talked about how the SEC is looking at private markets and crypto, and in addition to ESG. I mean, this is about when you're comparing investments, you want to make sure that there's an equal footing. Going back to our first segment, would this help? You know, I think the institutional investors are on board. That's who you primarily serve, the big institutional, not the big, but the institutional investors, people who have funds, et cetera. I think they're on board, and they have a means. They can go to someone like you to help compare investments. But does this help get, quote unquote, I'm going to use a wrestling term here, get over with the retail investor and say, okay, now you can, keep your head in the sand. Now you can compare fund A, fund B, C together and look, or stock security A, B, and C together.
That's going to be a really, really tough ask. So I think people are going to try to do that. The reason it's so difficult, though, is that interpreting that data, it is going to be difficult. And it's not something that necessarily lends itself to really simple communication. And so, for example, one company, this is very well documented, that where you have different companies who are coming up with assessments of, how exposed are different companies to ESG risks, the level of agreement is really quite low. If you've got different credit rating agencies looking at some credit score, they tend to be in agreement. Where you've got different ESG rating agencies looking at different ESG scores, it's not as in line as you might expect it to be. And that's partly because they're looking at different aspects of it. One may be emphasizing environmental, the other may be emphasizing social. The data that you're working with is much more limited. And so it is this area that once you get below the surface, it's kind of messy. It's not as clean as it might be, which doesn't mean the data's meaningless, just means that there's a very big challenge in terms of making it really simple and to communicate meaningfully in a way that's easy to understand is going to be difficult. Anybody who's able to do that, and anybody who's able to come to the retail market with good, clear, and actually correct information, I think there's a huge gain for them if they're able to do that. But that's a really tough thing to do at the moment. We'll get there one day, I hope, but it's a tough ask.
Well, I like how you caveated it, said, and correct. Look, I lobbied very hard as a young child when my grades would come, and I said, look, this doesn't define me, or my SAT scores or my GMATs, and they said, look, this doesn't define me. There's a lot more to me than just A or B or C or D or F. Forget, I still couldn't figure out why there wasn't an E, but that's for another show. But it kind of goes, we're defining, you got to have some kind of quantitative standard for people to follow. And I've been use these standards, and I know there are organizations out there that use standards to evaluate and quantify, for example, target date funds or other types of investments. But in my mind, it really doesn't paint a full picture. And what you're saying is, I think, and I'll let you close out, but that it's really hard to quantify what are really a lot of qualitative things.
It is. And so we're trying to walk the line here between saying these measures aren't perfect, which is not the same as saying they're useless. And taking what data there is and getting what value there is in that. And by doing that, making sure that the next generation of data, the next generation of ratings is better. That's got to be the aim. But to expect perfection, we're a long way from that. That's for sure.
But any investment, Bob, is not 0-1. I mean, unless you're indexing, that's a different issue. But if you're using active management, it's not just this asset class. It could be any asset class. How do you compare active fund, large cap growth fund to this active large cap, right? There are different factors. You can compare the makeup of the portfolio, the geographic representation, all those kind of things. But this is not a perfect science. I mean, it's not 0-1.
But on what we have with ESG is, I think, the level to which that it's still ill-defined. It is kind of, there's a level beyond what we're used to in terms of the financial, as you say, any number, the profit number, if you look at it closely, is that accurate and so on. So any number that there's caveats around. I think the degrees to which the ESG is still clarifying, we're still working out what even what factors we care about: biodiversity, deforestation. I mean, I could list 20 different environmental or social factors that could be relevant for different companies. Even which ones we're going to look at, how you start to measure some of those. There's kind of another level beyond the type of uncertainty that we deal with every investment, and so that's what the industry is grappling with. But there's good people working hard to improve the data, and so I think we've just got to keep pushing for better data. And the more that the regulators ask for better data, and the more that investors then use that data, probe it, test it, find out what's useful, what isn't, it's going to take both of those for the data to get better. Regulation alone, you're just going to get box ticking. The market alone, it's going to be a free-for-all. You're going to get greenwashing. Smart regulation in conjunction with a market that cares about this stuff is what's needed for us to move forward.
Well, I think what's very clear, Bob, is that there are other countries outside the U.S. that are further along. Probably some lessons there to be learned. We should be looking across the pond to where you are and elsewhere to come up with our own set of rules here. Maybe put a little tweak of them, just like we do with retirement systems and other ways of doing business. Bob Colley, we're going to have to leave it there. There's a lot we left on the table, but I know you'll be back next month to talk about it some more. Bob Colley, great to see you. Thanks so much for joining us on the program this morning.
It's a pleasure. Thanks, Jeff.
Well, that wraps up this episode of BRN AM. Have a topic of interest somebody think we should talk to? Drop us a line. And don't forget, for all the latest security news on lifestyle, wellness, finance, tech, so much more and all in one place, check out today's edition of our daily newsletter, The Morning Pulse, on our website. Want to search our archives, check out our latest content? Well, you can visit the aforementioned website or our content partners like Amazon, Roku, Samsung. There's over 100 to choose from. I don't see how you can miss us. We're back again tomorrow for another edition of BRN AM. Until then, I'm Jeff Snyder. Stay safe, keep on saving, and don't forget, roll with the changes.
Waiting here for you to take and drink of. But if you're tired,
Now is your opportunity to co-create content around any topic on the first lifestyle and wellness network. Reach a global audience through our platform and co-own exclusive branded content. All of our programs are available on demand and also as audio-only podcasts, so you can take us on the go. Broadcast Retirement Network, available anytime, anywhere, and on any device.
Are you being audited and do you owe the IRS $10,000 or more in back taxes? Is the IRS threatening to take more of your money? Don't fight the IRS alone. The Tax Doctor is here to help you negotiate your tax bill and reduce your stress. The IRS can freeze your assets and seize your bank accounts, but you can stop these IRS actions. The Tax Doctor will work with you using our years of experience to represent your case to help you get the best resolution under the IRS guidelines. Help is here to deal with the IRS to reduce your stress. We've handled thousands of cases, so we know what we're doing. If you owe $10,000 or more in back taxes, do not call the IRS alone. Call a Tax Doctor now for a tax emergency analysis.
Call 800-224-6439.